All right, traders, welcome. It is Thursday, December 21st, 2023. 4 days to go till Christmas. One more day in the week here before the longer weekend. Let's get into what the markets did today, and then we'll jump into some trades. We're going to talk a little bit today about how we review a portfolio as well as how we journal and why journaling is important. So let's get into that. Share my screen. Let's pop into the trades on the day. So here's the market. This morning, we gapped up nicely right at the open, jumping up to about 47.39. Just slow sideways to lower action. Then we tailed off right around noon and bottomed out for the most part around 12:30, with the exception of this one little brief 15-minute period here. Just a slow, steady incline, and then all of a sudden, right around 3 o'clock-ish or so today, we just took off and ran to the upside. So pretty good finish to the day, finished pretty well overbought on the intraday sessions. Let's take a look and see how the overall markets went today. All right, so SPY as a whole, moving up about 1%. SPX up 48 points, SPY up $4.44. Again, 1% on the session. So yesterday had a nice pullback, hit the 2 ATR. Today looked like we were going to bounce back off of that heading higher. We're just riding this 3 ATR white line higher as we go. RSI getting back into that overbought territory. So we're still, again, between the 2 and 3 ATR level, close to the 3 ATR. Markets remain overbought, been overbought for almost over a month now, as we've gone just relentlessly higher heading into the end of the year. People are still buying. We knew that money was sitting on the sideline, so it's been pouring in. Getting pretty close to overbought on the weekly as well, getting really close to the 3 ATR level on the weekly, which at times we've hit, but then we've tailed off every time we get close. And we're not looking at the same, 90-degree, not 90-degree, 45-degree angle higher that we are watching on the daily. On the weekly, it's a little bit more flat, more like a 20-degree angle. So if we get this close to it, and Bollinger Bands are continuing to open up here, I think that we just got to be careful. Low risk reward. We'll talk about some trades in a moment. If we look at the Qs as well, same type of scenario. You are overbought on the weeklies. You are back to overbought on the daily, back to the 3 ATR. IWM starting to break out of this trading range here. This is really, really interesting. Overbought here, but MACD's been a little bit weak. We'll see what happens overall, but I think we could get this breakout and then maybe a retest of this line around 200. So if we break out, which we're trying to do this week, moving above that, it's struggling with it, but you're trying to get above it. If we can get above it decently, get a pullback that bounces off that and then takes off. I mean, this bottom of this channel, 162 to almost 200, that's almost a 40-point range. You could see a 40-point upside in small cap stocks. I think going into through next year. So I think small caps really could be where things rotate into. S&P and NASDAQ getting overbought here. I think if there's a pullback there, I think small caps are going to benefit. Doesn't mean everything doesn't go down together, but I think small caps could definitely benefit from some rotation here as we move forward. The number of stocks above their 50-day moving average, we touched base on the last video. We just keep watching it, just hovering around this 90 level, which is really where we see a lot of reversals. VIX dropped fractionally down to 13 on the session. Dollar dropping pretty good now, hitting new, fresh, recent lows on the day, just closing off of those. So the dollar just dropping, and that's really murdering a lot of other potential trades out there. We'll talk more about that here in a moment. And if we watch the 10-year note, 10-year note just continues to get beat up. It was up fractionally today with TLT just holding in there, pulling back essentially today, but these are overbought. So bonds definitely overbought here. No No upside trade that has a good risk reward right now. If we're looking at the 6A, good day today with the dollar dropping. Nice day up on the Aussie dollar. Nice day up on the British pound. Really good day up on the Canadian dollar. This thing is breaking out to fresh recent highs here and breaking this downtrend line that we've brought that dates back, quite a ways, a couple of years back, breaking through that downtrend line. So Canadian dollar on fire as well, and then the euro, you're looking at higher high, higher low, higher high, higher low. Now we officially have a new higher high. So just stair stepping up on the euro. It looks pretty solid here as well. I still think there's some more upside to be had on the euro. All right, if we look at oil today, it was down fractionally on the session, so just a little bit of a down day on oil, but it did finish well off of its lows. It's good for us. I'm very bullish on oil here. I like this sideways breakout. I like the way MACD and RSI look here on the daily. I like what MACD and RSI look like here on the weekly. So I still very bullish oil. I think I want to get along more shares here. These have been a good trade. I think on the down day today, I think I missed a little bit of an opportunity to get put on some naked puts here. I think I will try to get those maybe even in the after hours session once it kicks back off tonight. If we get any more weakness in oil, I think I may want to put on some more long trades in oil. And then if we're looking at gold here today, it's just sitting right at the top of this ascending wedge area here. You've got the larger uptrend that we're bouncing off of, but you could also really put in this probably more recent. In fact, that doesn't even look good here, but I think something along these lines. This is a definite ascending wedge. I think gold is ready to pop. So I think we could get a pretty nice run up in gold here, especially if the market is going to start to potentially tip over heading into January or in the January timeframe. I think gold's ready to roll. And it looks good on the weekly. It looks good on the daily. So I'm bullish gold. I'm bullish oil. Both of those trades are, together they make up the majority of my portfolio. Most of my buying power in my portfolio is in oil. So I've definitely gone harder into oil than I am in any other underlyings right now. And I like where we are. I think it's a great risk reward. I think you've got to look at gold and oil. I think you got to stay away from bonds that are overdone. I think you can look at copper as well. Here we've been doing really well in copper. Same type of setup as gold. I think this is ready to pop as well. It looks really good on the weekly. It looks really good on the daily to move up. So I think copper is another bullish opportunity. And I think you could do something in here with some naked puts. Potentially, we have 112s on. I think I'm going to add more. So this is where I'm looking right now. If we take a look at lean hogs, been weak down towards the bottom here. I think could be more downside to go on lean hogs. So I'm not signaling any kind of a place to enter here. Is not as good as live cattle. Live cattle here has had a nice breakout sideways for sure. Let's see if it can hold that, or do we start to dip back down? Weekly says it's a good opportunity, low risk reward to move up. The daily, a little bit undecided, a little bit mixed. So right now, I think we'll just hold on to the trades we have. And what we've got in live cattle is a trade, a 112 trade on that's in really, really good shape right now, up 31% in just 20 days on that trade. And if we take a look at nat gas as well, big update today. We talked about it yesterday that I think a 112 trade was a good option here. Today, big up move. Daily looks really solid to the upside. Really good risk reward here. The weekly could be curling back up. Not sold on this thing on a weekly basis yet that we're done going down, but a big move up today. I like it. I wish I'd put a trade on in a 112 here. So I think gold, I think oil, I think copper, and I think nat gas. I think all four of those set themselves up for some really nice trades to the bullish side right now. So I'm very bullish on some of the futures trades. And just taking a look at some of the volatility, oil had moved up today, just fractionally. Had a big move earlier and then tailed off, but I think you start to see oil volatility increasing. Gold volatility starting to get moving a bit. It's not massive, but it's got an IVR of 31 on the Tasty Trade platform. And I think that's still not bad. So I think you've got good volatility for these trades and some decent premium in gold and oil. Right now, let's take a quick look at the sectors for today, see if there's any opportunities there. Leading sector, as it seems to be almost every other day, is semiconductors. Semiconductors having a good day, up 8% today, an 8% move. So gap up and finish near its highs of the session today, even though MACD and RSI have been dipping a bit lately. It made a little bit of a recovery here. Second leading sector, how about this? Biotech still leading the way as well. It's been doing well, up 2.5%. Retail up almost 2% on the day. So retail looking pretty strong. And I think if we bring this line over, let's extend it here. You are right. At this previous level that we've seen. So we've seen a little bit of a break, but really we've failed at this level so far 2 times. It was a previous pivot level. I think if retail can get above this, I could be bullish, but it is overbought. I think if we fail here, I think retail gets hit a bit. Gold miners, still one of my favorite sectors heading into 2024. I like the weekly. I like the daily charts here. I think this sets itself up for a decent trade opportunity as well. Let's skip all the way to just the bottom. And the bottom is not really that bad, which is utilities, slight up day on the day today, and then energy up slightly on the day. So every sector green, so across the board, pretty solid update across the board, despite yesterday's big selling. Okay. Apple finished off of its highs on the session today. If we're looking at the daily chart, you hit resistance up here, okay, which is basically where the new high is. There's some previous resistance just off to the left here in July. That's what we tipped, and then we started to come down. We triggered a bearish PSAR signal today. You've got MACD falling, you got RSI falling. Apple chart does not look that healthy, so I don't really like things in Apple right now. Microsoft, it looks actually pretty healthy, moving up MACD and RSI on the daily, even though it's overbought weekly. Amazon having a good day today, up 1%. It looks decent here. Meta, just been on a tear. If you didn't get in Meta, you missed a good move. This thing had all the signs of moving nicely higher, and Meta looks pretty good here, up almost 1.5%. Google also today having a pretty nice update. So Google has certainly recovered. It's moved its way higher. It's gapping periodically to the upside. Here, RSI, MACD moving higher. Might be starting to get overextended on this move. We'll see. And NVIDIA trying to climb back up to that 500 mark where it continues to, it's failed every time. Is this the time to break it, or are we going to see another failure on it? And then Tesla, we've been talking about this to the upside. I think good risk reward here in a squeeze, coming out of a squeeze. I think this is a great place potentially on Tesla. I think it's a good risk reward trade. I still very cautious on the overall markets. We talked about Costco the other day too, and I alerted our members of this on Sunday that I really thought Costco was a call credit spread trade. So I really thought this would be a bearish call spread opportunity, and it's turned out to be pretty good so far. We've dropped from 682 down to 665. I think this thing could have further to fall. It's overextended. It's starting to roll over a bit. I think we pull back. I'd be looking for a pullback maybe at least to the 2 ATR, which is right now about 640, and maybe the 21 EMA around 630. So I think this thing has another 20 to 30 points to run to the downside. It's overdone. Great move to the upside. I think this is an opportunity to play this one to the downside. All right, let's take a quick look at the account today. and where things ended up. So delta, super low, 0.37. It's actually showing 0.34 in the after hours here. Great low delta, 0.01%. We could not be more delta neutral right now if we tried. Theta, 874. It's still a little low at 0.26, but that's where we've been hanging for a while in this low volatility market. I think we're going to get some trades on here to give us a little bit of extra theta. Netlick dropped fractionally on the day. Most of that due to a little bit of an oil pullback and maybe a little bit of gold here on our strangles as gold was making a move higher. I'd like to get out of these strangles before gold breaks out and makes that move to the upside. And then we can look to play maybe a 112 or something to the upside, or a 111. Here, buying power 211, which is 63%, which basically is 53% to work with. Very close to our 50%. I think if we wanted to put some trades on, we certainly can. We didn't close anything off today in this particular account. So we're sitting at 99.6, basically $100,000 a year in the account. I think we're in good shape. I like where we are. I think there's some trades to be put on. Went through some things with our folks today and covered our trading account. I'll just give you a quick insight on it. When I'm looking at the accounts here, and here's the main income navigator trading account. Here's what you see in here. So the first thing I'm going to do is I'm going to run through each one of these trades, okay, by the futures expert. And you can see it's all futures. There are no indexes. There's no equities. There's none of that here. It's totally a futures-based portfolio, which is what I like to trade. Gives me good leverage. I feel comfortable with the futures that we do have on. And not that they can't go screwy on you, but I don't have the same, in my opinion, I don't have the same issues that I have with a stock like an Apple or an Nvidia or a Costco or somebody, where all it takes is one person to say one thing, a supplier to have a problem. It just takes one bit of news. Not that news can't affect futures, but futures is a much larger market, not one individual. So one person doesn't technically sink the whole futures, but they still have risk. And 100% you got to be aware of your risk on these. My couple steps here that I want to follow is, number one, I do this summary at the end of the day. It gives me a chance to see what are the markets doing. So number one, I want to know what the markets are doing, so I can plan tomorrow, today, and that's number one. So goal here is, when I'm doing these videos, they're as much for me as they may be for you, and hopefully it's helping you develop your trade plan. In my trade plan, how do I go about managing my portfolio? Well, number one, in the evening, I got a plan tomorrow, today, which means, what are the markets doing? Okay. I was identifying the fact that I think I think the markets are overbought. I think we're at an inflection point with the 50 moving average on the S&P. You've got a put call ratio that continues to drop, and the more that drops, the more the market goes up. I think that's getting overdone as well. So I think, the markets are definitely overbought. Okay. So number one, I give a market sentiment. I know where I feel the markets are. I'm looking at futures. What I'm doing in futures is I'm identifying potential trades if the possibility exists. So I saw bullish trades in oil. I saw bullish trades in gold. I saw bullish trades in copper. I saw bullish trades potentially in nat gas. So there's potentials there. What kind of trades are those? Don't know. We'll look at everything else. So I'm planning tomorrow, today. Right? I've figured out where the market is, where I feel the trends are. Are we overbought, oversold? Where are we on some of the different futures? Then, as I do with you guys here, I go into my account, and that's what you're seeing. Previously was, I have low delta. I don't have to make any adjustments. I have good theta. I could use a little bit more theta. Okay, so I'm making a note. Now I need more theta. My Netlick is in perfect shape. Almost at new all-time highs. Buying power, just a tad over my 50% range. So it's at 64% minus the 10% in bill. So I'm at really 54%. I'm right where I need to be. So I can't put a lot of trades on, but I might be able to put something on in there. A lot of some of this buying power is used up with some hedges and things like that. But anyway, that's where we're looking at. So I've now got some ideas of what I want to do tomorrow. Now, what I do during the day is I will go through all of these positions that I have on, and I'll take a look what needs to be done. Okay, 1-1-2 trade here, nothing to do on the put debit spread, even though it's slightly profitable. Can't close it or roll it or do anything with it now. Naked puts, not at a profit target. I've got naked puts here left over on a 1-1-2, nothing to do with those. And then I'm actually just sitting on naked puts on oil right here that are up almost 57% now. All I do is each one of these, I go through every single trade, takes approximately 5 minutes, probably not even. It takes me about 5 minutes to figure out, do I need to make any adjustments? So number one, where's the market? Where are the different underlyings I like to trade? What are some opportunities if I have something available? Number two, I'm going to look at my 3 metrics, which is delta, theta, buying power. Going to determine if I can put on new trades and what I should be doing with them. If I need theta, I've got to sell something. I'm a premium seller anyway. If I've got the buying power, I'm going to put that in action tomorrow. If my delta's getting out of whack, I might have to pick something that helps right size that, but it's not dead neutral. All right. So then I go to my portfolio positions. I look at each one of them. Nothing needs to be adjusted right now. There's nothing that needs to be taken off, added on, adjusted, rolled, nothing. So there's no positions that I have to deal with. Okay, perfect. My last phase that I'm going to go through here is let's just get a trade on. We'll wait till the market opens tomorrow, or we'll see what happens overnight tonight if there's any opportunities that present themselves. But I will definitely be looking at what to do. The other piece here too is as I go through, I'm making a mental note based on my trade plan, how many strangles do I want to have on? Well, right now I'm light on strangles. Long-term 1-1-2s, I'm set. Standard 1-1-2s, I'm over slightly. And I have a few spec trades on. So right now, really, it's strangles is where I want to get in at. Now, I'm bullish on some of those indexes that I said, so I'll have to go back and I'm have to take a look and see which ones lend themselves to a strangle trade more than others. And we've been talking for 2 days with members about how I set up strangle trades. And I've mentioned it here. Strangles are based upon probabilities. Okay, I have a specific strangle. If you look down in the playlist here, you can see how I trade strangles. I'm pretty transparent with that. It's in my trade plan as well for our members, exactly how I'm trading strangles. I know what DTE I want to trade. I know exactly what delta on the calls and the puts I want to put those strangles on. The great thing about that is it's just all probabilities. I don't have to worry at all about what's the volatility. I got to look up the C-vol, or I got to look up the volatility on oil. I got to look up the IVR. Those things are all great, but they don't change your probabilities. They don't make the trade more likely to win or lose. Your probabilities are set pretty close to near the open when you're selecting those deltas. I have also found that I have back tested every different scenario that I could when it comes to how do I want to manage my strangles? What deltas do I want? I've looked at 7 deltas, 10 deltas, 12, 16 delta strangles. I've looked at, do I go a higher delta on the puts, a lower delta on the call, so I can keep it a little bit more even and aligned due to skew. I've tested all of those, and then I've gone and found out which one of those seems to work best. Then I started to tinker with what's the best profit target. Is it 25%? Is it 50%? Is it 70%? 75%? Is it 40%? What's the best profit target coupled with the best stop loss? Is a stop loss at 1x, 100%? Is a stop loss at 200%? Is a stop loss at 300% best? Which stop loss is it 1.5%? Or 1.5x, 150%. What's the best stop loss? Well, I've come up with exactly what back tests the best for me, okay, which gives me a comfort level that, okay, I think that's the direction I want to go. I've been doing those trades, and I think I let you guys know from a strangle perspective, when I look at my strangles on the year, overall, my total strangles are, I've put on 134 strangles. I've had 118 winners. Okay, so 118 divided by 134, okay, 88%. Okay, which is almost exactly what the probability of profit is on those. But I take the probability of profit on what I'm doing, and I have a sense of my win rate. Okay, I've come up with what I believe is the best profit target and stop loss, and I've also determined what the best DTE is. There was a study that was done. It actually was done, I believe, by Tasty Trade back then, when we looked at what DTE had the best ratio of expected, implied volatility versus realized volatility. And it wasn't 45. Their own study said it wasn't 45, it wasn't 60, it actually was 90. Okay. 90 days out gave you the best ratio and the highest difference between expected vol and realized vol. Okay. Why wouldn't I want to use that? I really don't care about volatility as a whole. I'm not looking for something that has an IVR of 50 or 30 or 20 because it doesn't affect it doesn't have anything to do with the win rate. Okay. The win rate is simply going to be a function mathematically of the probabilities that you have here. Okay. Trading high IV, low IV doesn't matter. Don't get carried away with high IVR or high C-vol, or C-vol's moving up and then it's tipping. I don't care what it does. Okay. If it's high vol, great. Guess what happens with high vol? I have the same win rate, but I make a little bit more money. Okay. And if I'm in low vol, oh, but what if volatility expands? Well, what if it expands? Okay. If volatility expands, I'll deal with it if it becomes an issue. I don't care what volatility is doing. If my price is in the center of my triangle, volatility can go to 9,000% for all I care. Okay. Will it exceed my 2x? Yes. I have some plans in there in case it does. Okay. But I'm looking at where the price is more than I am the volatility. If volatility expands, but my price is dead center of the triangle, I'm going to sit there for a while and I'm going to let it go over my 2x as well until volatility contracts. And volatility will contract. Vol always contracts. Okay. It expands, it always contracts back down. Okay. Volatility will always mean revert. Price does not have to. Okay. Price can go up and it can keep going up. It does not have to mean revert. Okay. Price does not ever have to go back to the mean. At any point in time, it does not have to go back to 0 to go back to 100. Okay. It doesn't have to go from 100 to 50 back to 100. It doesn't have to do any of that. Okay. Price can go whichever direction. Volatility, though, will mean revert. If you have high vol, great. If I place a trade in high vol, I might be able to take the trade off quicker. Okay. Maybe it's 14 to 17 days versus 30. Okay. If I'm in low vol, it might take me 44 days. It might take me 41 days instead of 30. 30 has been my back-tested target. Most trades come off in 31 days. That's the average. For all trades, hundreds and hundreds of trades that I've done, thousands of strangles at 90 days using my exact metrics. It takes 31 days on average. That's the average. In high vol, when I put them on, they come off quicker. In low vol, they may come off slower. It's possible with a big vol spike. It could, if the stock is moving in one direction and vol spikes, it's going to cost me. Okay. It's all good. I stop at 2x, I move on. Right. So I figured out exactly what my metrics need to be. I don't need to overthink it. I don't want you to overthink it either. Just like hedges, I don't want you overthinking hedges. Okay. We got to get Black Swan hedges on. Okay, we could tank, and there's people. People look at the 112 trade and think, look at the downside of that. Yeah, look at the downside. Okay, if selling premium makes you uncomfortable, then a 112 is going to make you really uncomfortable. Okay, if you don't like selling naked puts, don't do the trade. Okay, but I'm selling naked puts at a 5 delta. I'm 20% out of the money, and I have a stop loss on my trade. Okay, so the trade's not going to, I don't have an infinite downside. Okay, that's not how it works. Okay, if we tail off and the market goes lower, I'm going to stop out and I'm going to get stopped out. Unfortunately, for most people that don't like it, I don't get stopped out on 112 trades. Okay? They have a 100% win rate this year. They had a 100% win rate last year in a down market. They win. Okay, and you got to manage them properly. If I get stopped, I get stopped. Okay. I would rather have a win rate of 90 to 100%, okay, take a couple stops and still keep winning. Just like my strangles, 88% win rate. I've made $23,000, $24,000 this year on strangles. Okay. I just keep putting them on. I don't care what the vol is. Okay. Don't get caught up in all of that stuff that you have to have high vol to sell premium. It's helpful. You get more premium, you get farther away. Okay, but it doesn't change the probability or your win rate. It just changes the amount potentially that you could win. 1-1-2s, I don't worry about the back end or the tail end of the curve because I have stops in place. Okay, and I also have a put debit spread that'll help me a bit as well. You know, my stop on naked puts on my size 1-1-2s is about $6,000 because I'm taking in roughly $3,000 in credit on the naked puts. So I'm putting on 4 of those and 2 of the PDSs. Okay. A 2x loss on those would be a $6,000 loss, not a $90,000 loss. It's not how it works if you have stops in place. And if we do go down there, I also have a 50 wide put debit spread. Okay? A 50 wide put debit spread is a $5,000 put debit spread if we go all the way down too. If I stop at 6,000, how much of that $5,000 put debit spread is going to help me? Okay? We have to move pretty heavily down, okay, or have a pretty big vol spike, which would only really happen if we were moving down heavily for me to get stopped on my puts. And if I do, how much of that PDS is going to help me? Some of it, okay? It's not a perfect hedge, okay, but it will certainly, if we're in a black swan event, COVID, good example, COVID, we dropped 30% over 30 days. We didn't drop overnight. COVID was not an overnight 30%, 20% crash. Okay. COVID was a 30% stair-stepped down move over 30 days. Okay. 20 trading sessions, 30 days. Okay. COVID did not happen overnight. Okay. 20 days is a pretty, 30% is a pretty steep drop, but you had chances every day to stop out your losers, put on new trades, add hedges, clean up your buying power. Okay. Now, if we drop 30% tomorrow, we're all going to be in a lot of hurt. I do have other hedges on, but I believe that the put debit spreads that I have on are going to keep me from getting totally whacked. And then I do have other hedges that'll clean up the gap. I don't have to get crazy here. And my hedges are much higher up. So they're starting to take effect at like 4,400. If you're buying 2 delta naked puts or 2 delta puts and something, you've got to go down over 1,000 points before that black swan hedge starts to kick in. I don't want to wait 1,000 points to start making some money on my hedge. I want the hedge to kick in a little bit sooner. You got to pay for that. But I believe that if you're willing to stop at 2x on the naked puts, if that's your plan, or on the entire trade, whatever you want to do, and then you let your put debit spreads ride a bit, you're going to help offset a good chunk of that. And if you have some basic hedging on, not black swan hedging, some basic hedging on, you'll offset that. If the market goes down 20% and I go down 5%, I'm a pretty happy camper. I'll make that back up in a 2-month span after that. So I think once we get moving on it, you have opportunities. You just don't need it to happen overnight. Your biggest thing when you're hedging is look at your buying power. If you run out of buying power, you've got a problem. Okay? Margin call is not a problem. You sell stuff. Okay. What is a problem is if I have no buying power, I cannot roll and I cannot make moves I want to move. I can't put on additional trades. I can't roll out. If we drop heavily, I might roll something out. Okay. There, I can't roll because you can't buy something and then sell something new, which is your roll. You can't sell it if you don't have any buying power. Okay, so you've got to really manage your buying power more than anything. You've got to have, in my opinion, a way to clean up your buying power, which is keep it nominal as you're trading, 50%, 60%, something like that. And if it spikes to 100, you've got to have ways to clean up your buying power that allows you to live, to trade, and get out of any of the jams that you have. Once you get comfortable with it, I think you're okay out there. So anyway, thoughts from me. Not everybody agrees with this thing, and it's all good. Whatever helps you sleep is what you should do. If you need black swan hedges and you need to be hedged to the gild and you want it to the gills and you want to have all of these trades on, you should do it. Okay. Either that or you're trading too big or you don't have a plan to get out anyway. Don't start throwing hedges on until you know what you need to hedge, how much you need to hedge, and what would happen if you move down. Don't guess what it is on a spreadsheet. You got to model it in your portfolio. Figure out what's going to happen if we drop 500 points and volatility goes up 20%. Know what's going to happen, how things are going to react, and then figure out what hedges would work best for you. Not all hedges work for everybody, okay? Because not everything trades the same. I'm also betting that even my gold and oil trades may get stopped out. But is that really the case? If the markets tank 10, 15%, 20%, will gold tank as well, or will gold become a flight to quality or a flight to safety for people? I think initially it could tank, and then, or it could at least drop, and then I think you might see some rotation into gold. Okay. Will oil be affected by the market, a severe market sell-off? Maybe. Okay. Maybe not. Okay. Maybe people will move into oil. Maybe because the economy is crashing and things are dropping, that oil will spike in price. Okay. Great. What trades do you have on that spike the oil price? Or will oil just drop in price because no one's going to want to buy oil because nobody has any money anymore? And now there's no demand, and that drops the price of oil. But will oil, live cattle, gold, will they all be affected the same way as the market? Well, I've already told you that more than half of my account is not in ES, which means more than half of my account is not in the market. Okay, it's in oil, it's in gold, it's in copper, and it's in live cattle right now. And it's also in bill, okay, treasuries. Will they all go down at the same time, the same amount? Maybe not. Some of those may really be, moving quite the opposite direction. They may not move down at all, or they may move half of the other one, so I don't get stopped out. I don't have to worry about hedging them. So really know what you need to hedge. Be smart about it. Don't just hedge your whole portfolio. Hedge what needs to be hedged. And we just talked about it. Have that plan every day for exactly what you want to do. When you manage your portfolio. Know the market, know your underlyings, know what potential opportunities there are. Go through your portfolio every day and double check your positions, what needs to be cleaned up. Then you look at your metrics, determine from there, do I have opportunities to make trades? Where do I need to put trades on? And now you know it. You have a plan every day. You can run through this stuff pretty quickly. It's a long video. I appreciate you guys hanging in there with me. If you liked it and you feel you got something out of it, go ahead and click that like button below. It would really help me. Go ahead and subscribe. If you have not subscribed, subscribe. Find out what we're doing here in the YouTube channel. Lots of cool stuff coming. And if you're not a member of the Discord, get over there and see what we're doing. Okay. You got people popping in. Some people pop in, some people pop out. Most people stay for many years, a long time in there. Got a lot of new great members. They're adding so much value in there. You got to come and see what we're doing. It's the investment in yourself that's going to make the difference in 2024. If you're not a Discord member, get over there, learn it, and don't fall prey to all the stuff that you see, including these videos that I put out on YouTube as well. If you don't agree with me, it's all good. You don't have to listen. Okay. You can find something that makes sense for you. Okay. But I'm a chicken. I'm not going to put a ton of stuff at risk, nor am I putting on a 112 that has unlimited downside, even though technically it does, without any kind of bumpers on there. I'm going to make sure that I've got stops and play things that are in control that are going to stop me from dropping. So if you want to learn how to trade it, you want to learn how to trade some more unusual versions on it, you want to learn how to adjust, you want to learn how to make money, you want to learn how to manage your portfolio, and if you want to learn how to trade for a living, come and join for us. We'll get you going on that. All right, take care, everybody. Have a great rest of your evening. Be safe out there. Bye-bye.